So in this video, I just want to give my technical breakdown and thoughts on Google and just a possible trading strategy for you to get involved in the stock. So let's get started. So just looking here at the daily chart of Google, can see that it's just been in a massive downtrend lately. It's really enjoyed quite a run with the rest of the market the last couple of years, and especially in 2020 and 2021, this stock was on fire. Now, I've been an investor in this stock for many years, and this downturn has been pretty painful for me, but I am not getting out of my position. I am still a very long-term bull on Google despite the headwinds that they are facing. So some of the headwinds that they are facing most notably is just that the advertising market is contracting, and Google, despite its growth, is proving to be a cyclical business in relation to its earnings. Advertising comprises 90% of their revenue, and at the end of the day, they are an advertising company. So let's not forget that. Now, the stock did have this most recent downturn here when Microsoft announced that they're going to be incorporating AI ChatGPT into some of their apps, and especially into Bing. And if they can take even just a little bit of that search market, even though Google is a verb, and just Google it, just Bing it, that really doesn't quite sound the same. But their revenue, if Microsoft can even take a chunk of that, just a little bit, that is really going to impact Google's margins, and that is what is spooking investors, and that's why the stock came down so hard here. But they are getting lean. They have been laying people off, and they are cutting some expenses. They still have a ton of cash. They have great cash flow. So I just think in terms of an investment, you're going to be okay. I don't think this is going to fall out of bed. It's already down, whatever it is, like 30-ish%, something like now. But it's a great company. But now let's just kind of look at the technicals a little bit. So it's been downtrending here since its high back in February of 2022. You can see there was a death cross right here where the 50 crosses under the 200-day moving average. That is a very bearish sign. So let's just take a quick look at some channels here just so we can get a sense of what's going on. Turn that off. And let's look at the first channel right here. So you can see it's just been in a downtrend. Gets up, fails. Gets up, fails. Comes back down and fails. Now, we did break out of the trend here, but this is kind of feeling like a false breakout to me, which happens a lot. Just whenever you get a break out of a trend line or a channel, that doesn't mean, all right, party on, everything is good. There are fake out breakouts, basically, and you can see it shot right up here, but then it came right back down, and now it's consolidating under that trend line. Also, if we examine some of the consolidation patterns and flags that are happening in this downtrend, I think that'll help us better understand what's happening right now. So you can see right here, we pulled back, we consolidated, dropped down, broke out of that channel, formed another channel right here, broke down again, formed a little mini one right here, but whatever. And then this is the current one that we are in right now, where we are bouncing around, had the breakout, and at first glimpse, this really looks like a bullish channel, and it certainly has all the hallmarks of that. It has higher highs, higher lows, and it looks strong. But let's just be careful right here. So there are a couple ways to play this stock, in my opinion. The first thing you can do is, since this is an established trend line right here, you can get long Google around this price, 94.95, and you can set a stop out below this trend line, so maybe around, I don't know, 92, 93, because if it does break this lower trend line here, it's probably going to come back down to test these lows around 83. So that's one way if you're trading it. Now, if you want to invest in the stock, I see nothing wrong with averaging in right here. Google is trading actually below a market multiple, around 17 times. I think as of recording this video, the S&P is trading around maybe 18 or 19 times. Don't quote me on that, but it's definitely cheaper than the market. So that is a good sign, and it's a profitable company. It's not like some of these other high growth tech companies that have great growth but no profits, which the market is like a little skittish on right now. So Google definitely has that in its going for it. So another option you can do is you can sell some puts, basically. So if we just look at this level right here, we have a couple different levels we can choose from. We got this level here of we'll say 93, 85, or 84. So 84, 85 is kind of the same. Well, you can sell, so this is going out a month, you can sell that 93 put for around $2.82, which means your break even is going to be around 90 on the stock because you're taking in that premium. I'm not sure if I'm as crazy about that. I think I would rather prefer just to leg into the stock than buy that. But you can buy, or excuse me, you can sell the 85 put for 77 cents. So you get $77 on that, and you would be put to the stock if it gets here. Now, if Google does get down to this level, that is going to be an excellent buy, in my opinion, for a long-term investor. But we could continue to see a continuation of what's been happening here, where we bump up against a trend line, we pull back, we consolidate, and then we take another leg lower. And ultimately, Google's COVID high was around $75. So if the market gets a little bit skittish and there's more rate hikes and the inflation data comes in a little bit hotter than expected, and maybe their earnings for next earnings report, which is on looks like April 26th, somewhere April 25th, aren't as good, the market could definitely take a leg lower and bring Google with it. So those are just my thoughts on Google. You can begin to leg in here. If you're an investor, if you want to trade the stock, you can buy it against this lower trend line with a stop out around 91, 92. Or if you're a little bit more patient, you can certainly sell cash secured puts around 83, 84 and just collect that premium until you get assigned the stock, or the stock just goes up and you get to keep that premium altogether. All right, so that's it. Thanks guys for watching this video. If you enjoyed my analysis, give me a thumbs up, consider subscribing. I have been making just a lot of shorts recently, but I'm gonna start doing some longer form content, just sharing my thoughts on the market. This is not financial advice. This is just my personal thoughts. If you wanna take, I would suggest consulting a financial advisor before you take any risk in the stock market and really understand what your risk profile is and how much you can afford to lose, basically. But anyway, thanks for watching, guys. See you later.